we have in terms of a market reaction real quick, let's just do a pulse check in terms of where things are at. We have got stocks bouncing back here since that kind of Friday move. We saw some follow through. NASDAQ, same thing. The Russell higher here. Gold is lower off of this, and the dollar index has moved higher as well. We also have oil making a push lower here this morning, and Bitcoin still holding steady near those all-time highs around 110,000 at the time of us filming here. So very interesting to just kind of see where everything is at. Indices holding up really well. If you've been following along on the channel here recently, then you probably know that I am already long the Russell. I bought the Russell in anticipation. I'm not going to say that I told you so, but I kind of told you so. I'm kidding, of course. Markets are very hard to predict, but with the whole, 50% tariff threat and then pulling back that threat, that's not the first time. It's not even close to the first time that has been the playbook here recently with all the trade stuff. Consistently, what we have been seeing is big, scary threats followed by backing it off. Big scary threats, backing it off. Big scary threats, and the big scary threats are obviously a negotiation tactic, right? Again, it is the classic Trump move. Big swings in the opening of the debate or the negotiation, and then dialing it back. So we've been seeing this pattern here recently. It's been a persistent one, and has made some really interesting moves in the indices world, right? You had this big, scary, all or nothing approach, and then we saw the 90-day pause, and since then that was actually a pretty incredible bottoming signal, despite how scary the headlines got. But we've seen that on a smaller scale a couple different times. So-and-so's not cooperating, 50% tariffs, market drops, and then boom, we're bouncing back already. I personally think path of least resistance for indices is a continued move back to the all-time highs. Why? Well, because again, it is pretty clear. I think most people are now seeing that the likely scenario for all this trade drama is not the worst case one. The worst case one was 7 million %, an arbitrary number taxed on Chinese goods, right? Because they were never going to stick. They were so high that it would just bring the whole world to a crashing stop, right? That was the fear that caused the market to sell off. But it doesn't look like that's very likely to resume, right? U.S. and China trade relations are going better than that was, right? Where they were kind of in a tit for tat kind of thing, right? Jumping higher and higher each and every day, back and forth. U.S. said 100 something, and then China would fire back and say the same. And we've come back from the ledge a little bit. And so I do think that the path of least resistance here is now, okay, there's other sides of this whole, administration that could be potentially perceived as very positive for markets. For example, taxes being kept low, or finding new tax reductions. Those could be very bullish things for stocks, which would obviously, that's improving their profitability. At the same time, less regulation involved typically is perceived as a positive thing for stocks. So there's the negatives, which is the uncertainty around the trade dynamic, and then there's the positives of more favorable business conditions, at least perceived by Wall Street, right? So that's the concept. And I think that we're going to see more of that in the back half of this year. And I start out this year with a target of 6,600 on the S&P 500, and I still think that is possible. But I still think it didn't look very optimistic when we were down in the dumps here, but the bounce back has been really remarkable. And it's a 12% move here in the second half of the year. I think it's possible. It's a bit ambitious, but it's possible. Good morning to everybody in the chat. Thank you for being here. What's up, Bulent, Ball Out? Good to see OT in the chat. James is in the chat. Good to see you guys. Hope you're doing well. Lots of stuff moving here in reaction to all of this stuff. You had, like I said, a bounce back in indices. I went long the Russell on, what was that, Friday? Yeah, I went long the Russell on Friday. We've had a nice bounce back so far. We'll see if that can persist. But big fake out there, big fear event, right? And then suddenly buyers rushed back in. I'm curious to see where the put to call ratio is in recent times. Let's take a look at that.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Yeah, so put to call ratio, back to fear levels, right? So you're seeing people scared about markets. That's the perception. When this reading goes high, if you're new to the channel, put to call ratio is one of my favorite indicators to keep an eye on for sentiment readings, right? Because what happens is you get everybody rushing to buy puts when they're very scared, and everyone rushing to buy calls, making the call ratio or the put to call ratio. When there's more calls traded, this level goes down, and when there's more puts traded, it goes up. So when puts are in high demand, that tells you that sentiment is bearish. People are buying puts like crazy. They're fearful of what could happen next. And so we see a lot of that happening here recently. Does that guarantee that the market is going to snap higher just to spite all these people? No, because it could do one of these things where it actually elevates even further. I just think that generally speaking, if this is above this blue line, the high put demand level, that's going to be, generally speaking, a bit more of a contrarian bullish signal for me in my own trading. Now, that's not the only thing I look at. Obviously, I look at a wide range of economic data and sentiment data to make a decision. But this is, again, like I said, elevated, and to me, produces a bit of a contrarian bullish perspective on indices, which sounds weird. You're like, how is this contrarian? The indices are up. Well, yes, but sentiment wise, people are thinking this thing has to crash. It's going to go down. And what we actually see is a high demand for puts reflected in the price. So that actually tells me, okay, the squeeze could be pretty nice. We could see a very quick recovery here and just grab basically all the stops or whatever, right? Squeeze the sellers a little bit more. So we'll see. But I do think that the path of least resistance for indices is still to the upside. I'm very curious to see if I'm right about that. If I'm wrong about it, then obviously we'll stop out and reevaluate the idea. We'll take a look now also at institutional positioning, see how things are going. Our last update was, of course, last Friday, May 23rd. So somebody asked in the chat, when is the latest COT buys and sells updated? Every week on Friday, we get new data. And so we have our, except for holiday week. So there actually may be a delay in the COT report this week due to the US holiday. If you have the Edge Finder, you can always read about holidays and how they impact the COT report right here. Click this link, and that will help to answer that. So, anyways, latest action I thought was really interesting. They bought the Russell, which obviously I'm long the Russell, so I'm glad to see this. They added long contracts, they decreased short contracts. Definitely a bullish weekly shift on the Russell side of things. They also bought the Nikkei, they bought the Dow, they bought the S&P 500. They didn't really buy gold, but they closed a lot of shorts on gold. It's kind of still a bullish move. It's not a huge bullish move, and we see gold lower here today. But let's take a look at the sell side. We see the Australian dollar got sold, Canadian dollar, the Japanese yen got sold, which is moving lower today. Yen pairs are moving higher against a weaker yen. You've got euro on the list, and then some selling on the NASDAQ as well. Added shorts, decreased longs. Speaking of the Japanese yen, I do have 2 yen positions long. I am long dollar yen, still in drawdown on this one, and I'm also long the New Zealand dollar against the Japanese yen, also in drawdown on this one. I do think both have potential to squeeze higher. These are very, very small positions for me that I'm looking to scale into. If the dollar yen continues to go lower, which I would prefer, If we can get a fill at 141, I'd add a little bit more to the trade here and here. That'd bring my dollar or my cost average around this area. So we'll see. If the price keeps going lower, then great. If it goes higher, then I'll look to just take profits on the move if I can. Euro back towards those highs. Still stuck in a range. I'm pretty neutral on this pair. Check this out. So I'm just going to throw this a couple months back. I'm going to show you what this tool does. So this is a new and improved version of an existing feature on the Edge Finder. It's a historical score of the Edge Finder. So this is past Edge Finder scores versus the price of gold. So for example, you can see that the first time that we got a bullish reading on gold notified to us on the Edge Finder, we can hover over this and we can see that was February 6th. And what you can see is that, let's actually mark this out. So February 6th is right here, right? So February 6th, approximately here, is when we first got a bullish reading on gold for the Edge Finder. Then we can go all the way, just for reference, to the first example of when we lost a bullish rating. Remember that bullish is 5 or greater, inclusive of 5. Technically, the first one was right here, right? So a little bit of upside was caught, and then we lost the rating. Well, then we got another one. So technically, here is our next bullish example. And you can see this one lasted. We stayed bullish on gold all the way until our next neutral reading right here. And pretty much during that whole time, that was the legendary kind of, well, I say legendary. It was my best trade this year, was this one right here. Edge Finder gave us a really strong reading as far back as, February 6th, February 13th, somewhere in that range. Stayed bullish persistently. Got maximum bullish around March 6th, March 5th, which is right around here. And then we had this massive run on gold. So all this is doing is it's just showing the historical score of the Edge Finder versus the price of the underlying asset in question. And you can see gold prices have actually gone sideways since then. We haven't really moved since, what did I say, April 25th? So if I go April 25th, right? April 25th is right around here, was the first time that we got a neutral reading. And you can see from there, we are literally just about flat to negative since then. So just something to think about, right? So, and this is what we talk about often on the show. If you're going to be trading something, some traders love to kind of reiterate, I only trade gold, I only trade NASDAQ, I trade euro dollar, and that is it. But what we have to think about is that sometimes the best thing to trade changes. Sometimes the flow of traffic is really congested. Other times we got smooth sailing. And so if you only trade one thing, the downside to trading just one thing, like I said, is that sometimes it's very difficult to make money trading gold if it's just chopping back and forth.
Markets are open, and big gap higher on the announcement that, that 50% tariff stuff that Trump talked about last week. We're going to go ahead and pause for 90 days, give everyone a chance to line up and negotiate. So is that a huge surprise? Not really. Last week was the bit of a pullback because of the announcement that we're going to tariff the entire Eurozone, and now we're going to negotiate and probably make them less. Plus a 90-day pause. So it just kind of cements the fact that this whole idea of tariffs and trade wars, I keep hearing the saying like trade war, it's more like trade more. But it's just because we're throwing threats out there and then pausing for 90 days just to force this negotiation window. So anyway, markets gapped up higher, right? We're up 1+% of the S&P, almost 1.5%, NASDAQ up almost 2%. Dow's up over 1%, Russell's up over 1.7%. We're still trading inside a couple of weekly candles here. So this now goes back a couple of weeks. Resistance, and I would say last week's low would be support. Obviously the market can do whatever it needs to do, whatever it wants to do. I still think this is going to be a bit of a struggle to actually go significantly higher without having some type of pullback. You know, from this low to, I really thought this would be the high, you know, having this low to high right around all the clustered EMAs. We go back to these moving average clusters. So this is where I'd expect to see prices pull back. You know, so we'll see what happens. Today I'm looking for an intraday move up to around 5,900. It is happening. So that was at the open around 58.50. I thought this would be able to get up to about 5,900. We're only 9 points away. So do we, you know, get to 5,900? Do we stay there and then pull back? Is that a resistance level today? That's what I'm watching for. It looks something like this. So if I zoom in here, these are my resistance levels. So 58.95, 5,900. Price has gone basically, you know, straight up this morning for around 40 points. And I'm looking to see if this is going to make its way up towards 59, pause, maybe make its way back down to recenter on the day. We'll see. We're still in a bit of an indecision zone, like I said, right? So this level, watching these equal lows. So this is now, you know, 1 week that kind of established the range, 2 weeks that tested the range. This is the third week. Are we going to go anywhere? Do we have any major news this week? It's the last week of the month. I think we have core PCE this week. That's about it. Consumer confidence already came out. Actually give us anything. What a crazy wild run in swing, like sentiment this year. Extreme bearish for, you know, 11 weeks in a row. Consumer confidence now printing higher. What else is happening this week? Let's go high impact. Anything high impact this week? RBNZ looking to cut rates on Tuesday. Median minutes on Wednesday. GDP on Thursday. This will be a big one on Thursday. So the quarterly GDP is forecasted to also print negative. If we do that, that would be 2 in a row. That'd be right? Or would that be the first quarterly print? Is this a negative GDP print? Last one was February. All right. I guess we'll see what happens on Thursday. This is a negative print. This is the big question, is like, are we going to see negative GDP? But everyone's questioning the integrity of the data because of what happened with trade war announcements. Everyone is kind of front-loading inventory, front-running supply, hoarding inventory essentially to have stuff on hand. But anyway, that's potentially the big impact news on Thursday. Unemployment claims, which have been steady. I've said this whole year, if we don't have unemployment rates, claims, continued jobless claims, if they're not trending higher, you know, the U.S. will avoid a recession. It might be like a soft recession. It might be like a rolling recession where different sectors feel it at different times. But anyway, markets still just kind of rallying up today. Anything else for the week? PCE is on Friday. I'm looking for let me go year for year or year over year. Let's go to the Bloomberg calendar. So Friday PCE, end of the month. 8:30. So I don't see any forecast for the PCE. So year over year, previous was 2.6. That's core PCE. And then there's the year over year, previous is 2.3. So will this be an improvement? Will we be, you know, less than 2.6? Will it be less than 2.3? If so, that might change the Fed watch tool. Because right now the probabilities are they're not doing anything until September. So still looking for a pause in June, still looking for a pause in July, and possibly that first cut coming in September. That's all subject to change, but I'm going to take a screenshot of this right here and just mark it for today, just in case on, you know, Friday after PC news, is this changed by the end of the week? I want to see a pullback in Aussie CAD into like a 50618 zone, and then look for a swing to the upside. Aussie Swiss, I'm still holding. A couple things. I might be getting out of this trade here for a win and then looking to see if I get a pullback. So if this goes up into this cluster, right around the 200 moving average, I take profit. Then I get a pullback and I level back in with swing trades, and then look at a 3-wave move and then take profit up here. So I'm looking for this on Aussie Swiss, New Zealand Swiss, very correlated. So similar price action. Aussie Yen, no trade. Aussie New Zealand, I'm just waiting. I'm just looking to like scale in long on this one. If we pull back to like 106, this will be interesting. The RBNZ is going to cut rates this week, looking like they're going to cut rates this week, which would put their official cash rate. So we're at 3.85 for the Aussie. If New Zealand cuts rates down to 3.25, that would actually give the Aussie New Zealand positive swap to the upside, which hasn't been the case in a long time, which means to me, I don't know how this reacts, but I wouldn't be terribly shocked if this goes up, trying to hit 1200 again, trying to hit 1400 again. Let me do this. I'm going to throw in, gosh, I kind of hate this trade right now, but RBNZ is this week, right? RBNZ is looking to cut rates tonight at 10 p.m. Okay. I'm going to throw in another. This is only 5,000 units. I'm going to throw a 5,001 unit trade in right now.
If we make a higher high, I'll buy the pullback. If we hit target on a Wednesday, in the morning of Wednesday, I'll take the profit. The problem, number one, is it happened so fast at night that I did not tell that I actually entered the order until it was boom, far gone. So, what did we learn from that today? It is the process. It is the fun. It is the 38.2 retracement. That's not a holy grail, but I'm just telling you, once you make a higher high, when you break the previous high, you don't buy there, you don't buy there, you don't buy. Okay, you can buy there too, but the better placement is somewhere at a 38 to 618 retracement. Stop loss should have been a bit lower, but fair enough. Almost, I don't know how much that is even. Is that about 10 pips in drawdown or whatever? And then, boom. Min, you were there. Can you clarify? Can you tell everyone that I told everyone this? Smarter boxes. Why do you talk like this? I do apologize for talking like this. So, but we had a huge turnout on Sunday. So the reason why I say it, because everyone is coming for me. Everyone like, hey, but you didn't post it. Hey, but you didn't tell us when you. Well, I'm sorry. It was 3 a.m. Sorry. Same story for British pound, Japanese yen. About entry at 193.21. Stop loss about 192.60. Went to R2 and I took profit about 195.14 or something, 15. A bit above where I initially said I would do, but also Wednesday morning hit target for the week, hit what I want. It was a straight line up. That doesn't mean that this can't continue up, but whatever I think should have happened has happened, and has gone so quickly higher that I'm like, whoa. Okay, that's why I say whoa. Min says I did. He entered himself. It was great. Then we are all good. Didn't you close out multiple losses on yen? Yeah, ball out. Yeah, I did. So I'm just trying to recoup my losses, if you're wondering. But can we celebrate today with profits ball out? Come on. Celebrate. Clap. So there is another thing that I said on that very same Sunday. I said we might go higher, we might peak early, we might fall, and we might turn around and go up by Friday. And believe it and not, it actually has happened on Aussie dollar, it's happened on the euro dollar, and it's kind of happened on pound dollar, and kind of also happened on New Zealand dollar. So where is the next moves? It is one, if you haven't sold the dollar pairs, totally up to you. If you haven't sold it, I would say wait. I think it can continue more, fall a bit more, and then continue higher. And New Zealand is falling. I don't like how deep it is. But tomorrow there is a Reserve Bank of New Zealand monetary policy meeting, and that can create some volatility, and doesn't really create a lot of volatility, but it's driven mostly in Europe. So if you have a 4 a.m. European time statement, you're probably not going to see a volume until London. And you're more than likely going to see like a drop on New Zealand dollar, US dollar, and then it rises. They're likely to cut one right now, and they're likely to cut a bit more later this year. But in the grand scheme of things, the market has only priced in about 60 basis points, about 0.6% of rate cuts rest of this year. So it's not really a lot. They have also come down to some kind of level that the market is pretty much okay with. Australia is supposed to cut a bit more. Currently expected 2.5 rate cuts at the moment, but for New Zealand tomorrow, also I'm going to pick it up. I haven't bought New Zealand yen this morning because I'm expecting that to happen. But on the other side of New Zealand yen, it kind of went higher. I mean, it was fun, but also what my entry would have been was about 50 pips in drawdown, and it would have given me 72 pips, and 72 pips away from entry when we have a central bank meeting is not really that much. It's not really that much. So that can go back to break even, then you're out, and it goes in the direction, and you're going to be angry at yourself because you tried to buy it, and then short-term volatility kicks you out. Only instead of just waiting for tomorrow, then do the trade after the fact that you actually know what they are actually talking about, and then you can make an informed decision. I don't like doing it before, because if they smack the market like JP did last time, then you're the one that feels sorry for yourself, because at the end of the day, it's the central bank's our daddy. You can't really do anything else about it. Do you think we have Trump's summer ahead of us? Do you know what? All I'm going to say is whatever I say right now is only valid for right now. What President Trump, what President Macron, what Prime Minister, what is that called nowadays? Not Bernanke, the UK guy. And it's not even Liz Truss. So whatever that UK guy is called, or the European president, which he called there, von der Leyen. What they were going to do tomorrow is beyond my control and beyond my beliefs, and I can't really adapt to it before I actually have it in my hands. And then I can make a decision. Do I trade on it, or do I leave it alone? I have also had students coming to me and say, I don't want to trade now because Trump is just making everything difficult. And I totally understand. I totally believe you.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.